I'm going to show you why a losing streak isn't a storm to outrun, it's a laboratory to rebuild edge, and how Jesse Livermore's mental blueprint turns red days into raw material. There's a particular silence that follows a string of losses. The platform feels heavier. The mouse is louder than usual. Even the clock ticks like it's judging you. I know that room. I've sat in it after 3 losers in a row, after 5, once after 9. Each loss small on paper but enormous in meaning. The first one stings, the second one argues, the third one whispers that your method is broken. By the fourth, it's not the market you're fighting, it's yourself. This is where most traders start swinging at ghosts, changing time frames. Mid-session, adding indicators like bandages, doubling size to get it back. I did all of it. Each fix made things worse, not because the market was cruel, but because I was abandoning structure to satisfy emotion. Livermore met this same corridor many times. He made and lost fortunes not because he couldn't read the tape, but because he learned, painfully, that a losing streak is the most persuasive liar in the market. It tells you to speed up when you should slow down, to reinvent when you should recalibrate, to trade identity when you should trade information. His antidote wasn't bravado. It was a sequence: detach, diagnose, downshift, and discipline. He treated drawdowns like doctors treat trauma: stabilize first, operate second. Here's what that looks like in my chair. The moment a streak emerges, I stop measuring money and start measuring behavior. Did I break timing rules? Did I enter before proof or exit after disproof? Are my losses from bad reads or good reads executed in hostile conditions? Livermore called this step studying general conditions. If the tape is ruthless, breakouts failing, reversals whipsawing, I'm not broken. My environment is. That distinction keeps me from rewriting my playbook every time the wind shifts. Then comes the emotional audit. A losing streak tries to make me trade for relief. That's the most expensive product on the exchange. Livermore's line echoes: the market is never wrong, opinions are. In a streak, my loudest opinion is that I must do something. His blueprint says otherwise: do fewer things, beautifully. Reduce size to symbolic, cut decisions per day in half, and tighten the definition of proof until it's undeniable. The goal isn't to win back money, it's to win back rhythm. I also rebuild ritual. Screens off earlier, review deeper, walk longer. Alerts carry the burden of attention so I don't chase movement to feel alive. Livermore often left the room to save himself from himself. My version is a hard timer, 15 minutes off the desk after any plan violation. In those pauses, the market keeps talking, but the noise inside me goes quiet enough for signal to return. This film will chart that blueprint across 10 sections. We'll map the inner paradox of losing, why the mind accelerates when edge requires brakes. We'll expose the psychological trap that turns one bad day into a bad week. Then we'll see the market through Livermore's lens, how he framed streaks as data, not destiny. I'll take you inside a real losing stretch of mine, what broke, what held, and the moment the tape invited me back. We'll descend to the emotional low point, then crystallize Livermore's turnaround rule: proof before conviction, even after pain. Finally, we'll translate it for modern screens and end with a practical step-by-step reset you can run the next trading day. Comment hook. What's your first reflex after 3 losses in a row? Trade smaller, stop trading, or try to win it? Back fast? Tell me below. I'll weave your answers into the next section's psychology map. The inner conflict or market paradox. The strangest thing about a losing streak is how it reverses gravity inside my head. After 2 or 3 consecutive losses, my hands feel heavier on the mouse, but my decisions get lighter, flimsier, faster, less anchored in evidence. It's a biological trick. Pain shrinks time. My focus collapses from weeks of context into minutes of desperation. I start craving any trade that will make the feeling stop. That's the paradox. Losses make me want to act, when the right response is to reduce actions until quality returns. Livermore understood that a streak doesn't just drain capital, it distorts perception. He framed markets in terms of general conditions first. Is the tape forgiving or ruthless? In forgiving conditions, Errors get cushioned by trend. In ruthless conditions, flawless ideas still bleed. When I ignore that lens, I take personal blame for structural weather. Then identity flips roles with process. I stop being a reader of behavior and become a defender of self-worth, clicking to restore confidence instead of waiting to restore alignment. The paradox deepens because losing narrows curiosity. I used to scan creatively, asking, where is the line of least resistance forming? In a streak, I catch myself scanning for revenge. Where can I make this back now? That's not analysis, that's anesthesia. Livermore's counter was sequence. Observe, verify, participate. A streak urges participate, justify, ignore. That reversal is how ordinary drawdowns turn into spirals. There's also the calendar trap. After losses, the clock on my wall becomes an enemy. I feel behind the week, behind the month, behind the version of me that should be further along. That phantom calendar whispers that time is scarce, so edge must be forced. Livermore neutralized that by sizing time to signal, not to schedule. He expected to be right soon when the conditions were right. If not, he assumed conditions weren't right. Full stop. No timetable bargaining. The professional paradox is this: the more you need a win emotionally, the less you deserve one probabilistically. My job in a streak is to expand time again, to stretch attention back to the wider tape so my decisions can breathe. I do it with two constraints. First, I cap daily decisions. For example, 2 trades maximum, 1 ad allowed, so speed can't impersonate skill. Second, I pre-declare proof and disproof before the open so post-click storytelling can't rewrite criteria. Livermore also separated loss type. There's the information loss, paid to learn that a setup isn't ready in current conditions. And there's the ego loss, paid to feel better for 20 minutes. Information losses are small and consistent. Ego losses are random and escalating. In a streak, my mandate is to pay only the first kind. That means returning to structures that reduce self-expression, alerts at proof levels, time stops alongside price stops, and a default to no trade unless the tape invites me. Underneath all of this sits a quiet commitment. I will not try to trade my way out of a feeling. I will trade my way back into a process. That is the only moral contract that survives a streak. In the next section, I'll expose the specific psychological trap that turns 3 red trades into a red week, the shift from observation to justification, from plan to impulse, and the 3 behaviors that always signal I'm crossing that line. When you're down a few trades, which temptation feels strongest? Trading bigger, trading faster, or changing your system mid-session? Tell me below so I can target the traps you wrestle with most. A losing streak creates a kind of internal paradox. Emotionally, I want control, but logically, control comes only from surrendering to process. The first few losses feel manageable. They're just numbers. But when the sequence stretches, something subtle happens. My mind tries to compress time, to force recovery inside the next few trades, as if patience were now unaffordable. That compression makes every move seem urgent, every chart feel like an opportunity slipping away. It's the illusion that movement equals progress. Livermore faced this same inner storm. He noted that losing stretches distort perception. Traders stop seeing patterns and start seeing punishment. The streak becomes personal. But the market isn't personal. It's environmental. His mental blueprint began with stepping back to ask, what kind of market is this? Not, what's wrong with me? When the tape changed, he adapted tempo before he adapted belief. Most traders do the opposite. They defend belief until capital forces surrender. The paradox deepens because the urge to win breeds blindness. Every attempt to make it back tightens emotional grip and blurs data. Livermore wrote that impatience always increases cost because it trades clarity for immediacy. He learned to interrupt that loop by reducing activity, even when it hurt his pride. In my own losing streaks, that's the hardest lesson. Doing less when I most want to do more. The streak whispers, act now. The process replies, wait for proof. That tension is the essence of professional trading, the ability to pause between impulse and execution. Livermore's discipline wasn't superhuman, it was structural. He built habits that made waiting easier than reacting. The paradox of loss isn't about money, it's about attention. And whoever controls attention controls recovery. Livermore approached losing streaks like a scientist, not a victim. He believed that every loss contained data, but only if you could look at it without emotional distortion. His greatest advantage wasn't that he avoided pain, it was that he studied it. When he found himself on the wrong side of a move, he didn't ask, "How can I make this back?" Instead, he asked, "What did the market just reveal that I refused to see?" That shift from emotional recovery to informational discovery was his edge. He wrote that the most dangerous period in a trader's career is not when they lose, but when they lose clarity. In those moments, the mind becomes desperate for meaning, and desperation doesn't analyze, it reacts. That's why he developed the principle of alignment with general conditions. Before placing a new trade, he would pause and ask, "Is the tape behaving normally for my system? Or has the character of the market changed?" If the environment shifted, he didn't fight it. He withdrew. His power came from patience, not persistence. Livermore knew markets have moods, and traders must adjust their rhythm to match them. A dull, lifeless tape demands silence. A trending tape rewards aggression. A losing streak, therefore, often signals that one's tempo has fallen out of sync. Instead of forcing trades, he would study until he could feel the rhythm again. Sometimes that took hours, other times weeks, but he never confused inactivity with weakness. He considered waiting a strategic action, an investment in emotional capital. He said, "There is a time to be right and a time to sit tight." To him, a losing streak wasn't punishment, it was feedback. The trader who listens to it recovers. The one who resists it repeats it. I remember one particular stretch that tested everything I thought I knew about composure. It was a month when the market looked alive but traded like a trap. Every breakout reversed, every reversal failed to follow through. I was disciplined at first, cutting losses quickly, staying patient, but somewhere around the sixth loss, that patience turned into quiet anger. I told myself I was staying calm, but my trading journal said otherwise. More entries, shorter holds, smaller reasons. I wasn't trading the market anymore. I was trading the frustration of being wrong. Livermore lived through the same kind of seasons, periods where skill and result completely disconnected. He once wrote about how the tape tricks you into participation when observation would pay more. During his bad streaks, he didn't search for better trades. He searched for better restraint. He'd stop trading entirely and spend his days watching the market without commitment. That detachment was his reset button. I tried to apply that same mindset. I turned off executions for a week and treated each trading day like a study session. I noted where price behavior contradicted my system, not to redesign it, but to understand its limits. I saw that volatility had changed character. Momentum bursts died faster. Reversals came from exhaustion rather than accumulation. The market hadn't betrayed me. It had evolved. By the time I returned, my first profitable trade didn't feel like victory. It felt like alignment. The losses had stopped teaching me lessons I didn't need. They started reinforcing the ones I'd forgotten. Livermore was right. Drawdowns don't destroy traders. Denial does. The only real mistake is refusing to see what the streak was trying to show you. Losing periods aren't punishment. They're recalibration. There's always a point in a losing streak when the charts blur into emotions. You stop seeing setups and start seeing symbols of failure. That's the emotional low point, the moment when logic has been stripped of confidence and replaced with self-doubt disguised as strategy. I've been there. You wake up earlier, read more, plan harder, yet every decision feels heavier. You question not just your trades but your identity. The losses no longer represent bad timing. They start to feel like proof that maybe you've lost your touch. Livermore reached that same darkness many times. After each collapse, he withdrew completely, not out of defeat, but out of necessity. He once said that no man can think clearly when he's fighting his own emotions. He'd step away from the tape, sometimes for weeks, and allow detachment to rebuild perspective. In those quiet periods, he found the clarity to separate himself from the market. The market wasn't his enemy, it was simply indifferent. It didn't know him or owe him. That realization turned despair into neutrality. I've learned that the emotional bottom isn't measured by money lost, but by how tightly you cling to control. The turning point only begins when you release that grip, when you stop trying to fix, prove, or force outcomes. Instead of looking for a comeback trade, I started looking for composure. Instead of charts, I watched myself. Was I sleeping? Eating well? Thinking clearly? The smallest disciplines outside the market start to restore discipline inside it. Livermore's brilliance was understanding that survival is a position. By pulling back, he allowed his judgment to heal before his capital did. The low point wasn't the end of a streak. It was the moment he stopped fighting and started listening again. Livermore's breakthrough came when he realized that recovery wasn't about winning trades. It was about regaining rhythm. He noticed that most traders rush to make back what they've lost, but that's just ego disguised as urgency. The real solution, he believed, was to restore alignment before capital. His core rule became simple but profound. Never try to recoup losses. Try to trade well again. That principle changed how he approached every comeback. He studied his streaks like a scientist studies weather. When the market turned choppy or erratic, he didn't fight it. He adjusted exposure and tempo. He waited until the tape told him it was time to re-engage. That phrase, "the tape told him," captures his entire philosophy. Livermore never imposed his will on the market. He listened until its rhythm matched his system again. Then, and only then, he struck decisively. The heart of his mental blueprint was pattern recognition not just in price, but in himself. He could recognize when his own emotions were trending against him. When confidence turned into stubbornness, he cut back. When clarity returned, he scaled. That feedback loop between self-awareness and market awareness became his recovery engine. He also created rules that forced patience. No trade could be taken unless it met all criteria and matched market conditions from his strongest periods. This eliminated hope trades. The waiting was brutal, but it transformed hesitation into control. Livermore taught that after every losing streak, the goal is not to find the next winning trade, it's to become the trader capable of handling it. Each reset was a form of training, not punishment. The discipline that rebuilt his fortune was forged entirely in the quiet between losses. For modern traders, Livermore's blueprint feels almost countercultural. In a world obsessed with instant feedback, his approach, waiting, observing, detaching, sounds outdated, but that's exactly why it works. The digital age has made losing streaks even more dangerous because the response time between pain and action is nearly zero. One click can undo days of discipline. Livermore's strength was that he created distance between the trigger and the reaction. That distance in today's market must be built intentionally. Modern tools give us data, but they also magnify noise. The key is using technology to filter emotion, not amplify it. I use alerts, automation, and journaling, not to predict the market, but to slow myself down. Every alert acts like a gatekeeper between impulse and decision. Livermore would have called it tape reading through structure. The structure keeps the trader honest. His method of studying general conditions also applies now. In an era of algorithmic shifts and headline volatility, it's easy to assume personal failure when trades don't follow through. But sometimes it's not your setup, it's the environment. The market moves through phases of efficiency and chaos. During chaos, your job isn't to outperform, it's to survive with clarity and tact. The modern version of Livermore's mindset means treating patience as a measurable skill. You track restraint just like you track profits. How many times did you not trade impulsively today? That's a statistic worth journaling. When you learn to quantify discipline, it becomes part of your system instead of an aspiration. Livermore's lessons survive because they expose the real edge. Not indicators, not secrets, but state of mind. Technology evolves, markets change, but emotion doesn't. In every era, the trader who can wait for proof while others demand action remains the one who endures. To implement Livermore's principles in a modern context, I built a process that separates emotion from execution. It begins with observation. Each trading day starts without bias. I scan for clarity, not opportunity. My first task isn't to find trades, but to confirm whether the market environment supports my strategy. If it doesn't, my only job is to protect capital and attention. Livermore called this respecting general conditions. Next comes structure. Every setup I take must meet 3 levels of proof: technical, behavioral, and contextual. Technical proof means price confirms strength or weakness through clear structure. Behavioral proof means volume, reaction, and market tone align with expectation. Contextual proof means the move fits within the broader rhythm of the market. If even one is missing, I don't trade. It's a filter that converts discipline into automation. Then comes reduction. I size positions small enough that my emotions can't dictate outcomes. The goal isn't to win big. It's to rebuild flow. Livermore often restarted with what he called pilot trades, small tests to reestablish timing. I do the same. Small size lets me reconnect with execution without the pressure of recovery. Finally, reflection. Every loss or win is logged with emotional notes, not just numbers. I write how I felt before, during, and after each trade. This reveals patterns that charts never show, the invisible edge that determines consistency. The process ends when I've restored rhythm, not when I've regained money. Livermore's philosophy was simple: the market always comes back. Your composure might not. So, the priority is protecting the state of mind that allows you to see clearly when opportunity returns. Livermore's legacy teaches that mastery in trading is not measured by how often we win, but by how we recover when we don't. Every losing streak becomes a mirror, showing the trader who they really are when confidence collapses. He understood that resilience is the final edge, an ability to remain functional, logical, and humble in moments when others crumble under pressure. After studying his life, I began to see losing streaks differently. They aren't interruptions. They are integral to evolution. Each loss strips away illusion, about certainty, control, and ego, until what remains is truth. Livermore's philosophy turns defeat into data and emotion into signal. That transformation is the real wealth he built. His fortune was made of money, yes, but also of patience, observation, and emotional intelligence. In today's market, the trader who survives is not the one who always predicts correctly. It's the one who adapts without self-destruction. Livermore's method is timeless because it aligns perfectly with human nature: wait when it hurts, act when it's clear, and detach when it's noisy. The strength to do nothing is the rarest skill in finance, and yet it's the foundation of every fortune ever built through discipline. When I look back at my own losing streaks, I no longer see failure, I see rehearsal. Every setback refined the rhythm I use today. Livermore's blueprint didn't promise immunity from pain. It promised the ability to use pain as progress, so when the next streak arrives, and it always does, I won't fight it. I'll study it. Because in every quiet, frustrating, humbling moment, I know what Livermore knew: the market rewards those who can stay calm long enough to listen.